Hello and welcome to Bunnex Investment Group. Today we are going to talk about a very simple H4 strategy. The whole tip will be shown, so make sure you watch till the end. But before we jump into the whole video, be sure to check out our free signals Telegram channel. The link is in the description below. Before we move further, I would like to point out that there are a lot of impersonators that are coming in my comments with WhatsApp numbers or testimonials from investment to some people with funny names. Please do not fall for those people. To contact me, you have to join the Free Signals Telegram channel. That is where I share all my contact details, and I do not ask anyone to DM me first. So let's continue. Here are the important concepts. In order to fully understand what we will talk about, one should be able to comprehend the concept of supply and demand zones. This is a very common subject in Forex, but a lot have not yet understood this very fundamental concept. Therefore, we will explain it first. So a demand zone is where all big buyers are located. And a supply zone is where all big sellers are located. You can see how fast price is moving once it reaches one of those levels. To draw these on a chart, you need to locate points of previous reversals. This is what we mean. On a Forex chart, price reverse at points of indecision. So therefore, this is a point of indecision and another point of indecision. So coming back to that point, this is the point that we refer to as the supply zone. Actually, when it is a line, it is a supply region as well as this one. It is the inverse is true. It is a demand region or demand zone. So these zones are drawn from the high and close price of the extreme top or extreme bottom candle on the reversal zone. What do we mean? We have candlesticks that are going bullish. Let's the first candlestick, the second candlestick, the third candlestick, and then the last candlestick in this bullish move, right? Then the market starts dropping, right? This is now a down move. So at this point, as you can see, we have actually got a reversal zone, and this is how you draw a supply zone in this scenario. High and close price. Actually, it was high and low. This was supposed to be low. So in this case, this is the extreme candlestick, and this is the highest price and lowest price of the extreme candlestick. That is where we draw using our rectangle from. Therefore, creating a supply zone. This becomes a supply zone. Same applies with drawing the demand zone. You have to look for the extreme bottom candlestick on the reversal zone to draw your zone from the highest price and the lowest price of that candlestick. So here's the example of a supply zone. As you can see, we had a move that was going up, and at this point, that is where we had a reversal zone. Price actually reversed at this point. So drawing our supply zone, we took the highest price and the lowest price of the extreme candlestick that and protruded it forward to create a level of supply zone. This is a region of supply zone. Here's an example of a demand zone. Price was going down and it reversed. After its reversal, we created a point of reversal, and drawing a demand zone, we had the highest and the lowest prices from this extreme bottom candle. That is where we derived this demand zone. Basically that. So the break and retest concept. Now that we have defined the supply and demand zone within our strategy, we are interested in seeing those zones being broken. In simpler terms, we need to see them being pierced and then price retesting them again. We will be interested to make our trades or entries once price come back to the zones. So what do we mean? This is a turning point or a reversal zone. Then on that reversal zone, we mark out our supply zone. After marking out our supply zone, we are interested in seeing a breakout through this supply zone and then retest of that supply zone, and we are interested to take trade at this retest zone of interest to go with the trend. Same applies with a bearish trend. We create zone, price moves and pierce through that zone and then retest that zone. Our zone of interest has been created. We take our trade to continue with the trend. So basically what I'm saying is this is a bullish market and a demand zone has been created. Actually, this one is a piercing move here, then retest, and we now have to look for entries here to continue with the trend. Same applies here. We have a piercing move. This one is the piercing move. After that piercing move, we have a retest of this zone becoming a supply zone and continuation of trend. So let's see how it exists on real charts. So this is CAD against yen. We had our first flow giving us that the direction is going upwards. Then a reversal zone where the market reversed and giving us a point of drawing our zone of interest. Then we had a breaking move. This one was the breaking move, and then a retest of the zone, and candle closure after retesting the zone is our point of entry to enjoy this move. Then this is euro against dollar. We had our first push signifying our bullish move, creating a reversal zone. After creating a reversal zone, we had a piercing move of the region that we had drawn using the extreme candlestick, and then retesting of that zone. Actually, that happened here. It also retested the zone again here, but we were interested to enter in the first one, in the first leg of retest, and enjoy this move. This is GBP against JPY. We had the market made a reversal here. After making this reversal, we actually drew our zone, which became a zone of supply later in the future. Then we had a piercing through move and then retest of the move. After retesting the move, we had a smooth flow downwards. This is USD against the South African Rand. We had our first move signifying, it actually signified a bearish structure or a bearish move. Then we had a reversal at this point and several consolidations, but creating a zone of supply later in the future. Then a piercing through move, retest, and trend continuation. So basically that is what you'll be looking for. The first thing that you have to look for on the charts is to see a point of reverse or where the market turned. Then draw your zone from that point of reverse. After drawing your zone, you have to wait for price to break through that zone and wait for the price to retest that zone later in the future. So this is gold. A lot of people made money out of this trade. I actually sent it out in my free signals Telegram channel, and people took money on this move. It was somehow 180 pips from this point to that point. We had a zone because price actually reversed here. After reversing, it gave us the zone of interest, or it was actually a demand zone in this scenario. Then it was pierced through. After piercing through, we had a retest of that zone to continue with the trend. So the whole concept is viewed on the H4 time frame. Why H4 time frame? Because that is where the zones of supply and demand are stronger to hold or to reject price. To enter with precision, you need to wait for H4 candle closure after price has made a retest in the zone of interest. So what do we mean? We mean that the price comes, let's take for instance, this is the zone of interest, or in this case, I'm going to use it as a zone of demand. The price comes back, makes a wick, closes, then after candle closure, H4 candle closure, that is when you trigger, you enter a trade. And this means in a day you only need to check the charts only 6 times, because we have only 6 H4 candlesticks in a day. So you'll be just checking after every 4 hours to see if your criteria has been met. So as I always say in all my videos, without discipline you will never be consistent, and without consistency you will never achieve the goal. So do a lot of meditation and stick to the only trades that we have discussed, and do not give yourself pressure, especially in the next incoming year 2021. Trade smoothly, have a trading journal, and make sure you journalize each and every trade that you take with the defined risk management and risk to reward ratio. In conclusion, follow your plan without deviation, distracting thoughts, or hesitation to act. On that note, thank you for watching. Like and subscribe, and check out our free signals Telegram channel. This is the link in red.